guys, so in this video we'll be going over Fibonacci entries. So I just want to go over the trading rules, so mark this down in your notebook. So number one, we're identifying current trend on higher time frames, so we're going over the monthly, weekly, daily, and 4-hour. Number two, we're identifying market structure. So A, we have our highs and lows in an uptrend and downtrend. B, we have our support and resistance key levels on the daily, 4-hour, and 1-hour. And C, attach trend lines if possible. Okay, so we have our current trend, our market structure, and then number three is Fibonacci. So in a downtrend, previous lower high to current lower low. Uptrend, previous higher high to current higher lows. So our highs and our lows. So number four, entry position, minimum 3 confirmations. So we have our fibs. The best retracement levels are 38.2, 61.8, 78.6. Also 50% sometimes as well because it's halfway. So for B, support and resistance. C, break and retest, trend lines, candlestick analysis. So there's many confirmations we want to have before entering a trade. So time frame entries. So we have our daily structure. So we drop down to 4-hour or 1-hour, minimum 30 if we're identifying the daily. 4-hour structure, drop down to 1 hour or 30 minutes, minimum 15. 1-hour structure, drop down to 30 minutes or minimum 15. So our monthly and weekly, we're identifying our long-term market structure and key levels. Our daily, 4-hour and 1-hour, we can identify market structure, support and resistance zones, trend lines, Fibonacci, and candlestick analysis. Obviously, if you see a bullish engulfing on the monthly and weekly, that's awesome. But mainly we would identify more stuff on the lower time frames. So 1 hour, 30, and 15 minutes are market structure, candlestick analysis, entries, and a breakdown of the setups. So again, if we see a candlestick pattern that's, let's say, a head and shoulders on the 15 minutes, that's only going to last for so long. If we see a head and shoulder pattern on the monthly or weekly or daily, that's going to last longer because higher time frames show the bigger picture. So our Fibonacci entries, so trending in a downtrend, we have our high and our low. Okay, so we have our lower high, lower low. So our high is at the 100%, our low is at the 0%. In this example, we rejected off the 61.8. So our entry would be at the 61.8 level, our stop loss above. Our first take profit, if we want to take some profits, would be at the 0%. Our take profit 2 would be at the negative 27% fib extension. So moving the fibs, we always just want to move the fibs to the new high, new low. Okay, so that's how it works. So the 100% to the 0%. In this situation, we rejected off the 50%, dropped down to the 23.6, then rejected off the 38.2 and went to the negative 27%. So this is where our stop loss and entry and take profits would be. Okay, so like I said, 61.8, 50, 38.2 are the best fib retracement levels, and sometimes it does hit the 78.6, so we just want to have our stop loss above. Okay, so trending in an uptrend, we have our low at the 100%, our zero should be right here actually at the high, sorry. So in this example, it rejected off the 61.8 and went all the way to the negative 68% fib. So again, move fibs to new low to new high. So we did that, 100% to this low, 0% to this high right above it. Rejected off the 50, went to the 23, rejected off the 38, went to the negative 27. Again, we can also draw a trend line here for extra confluence, but I'm just focusing on Fibonacci for now. Okay, so real-time example. So USD CAD on the 1 hour. So we have our high here, and we have a printed low. So this is our retracement, retraced right off the 61.8 and wicked. So that would be our entry. Our stop loss can be at the 88.6 because we're on the hourly. So that's not much of a huge stop loss. So we actually ended up breaking through the 0%. Since we had a nice bearish candle past the 0%, technically we could make our take profit 1 negative 27%, take profit 2 negative 68%. But if you feel comfortable taking profit at the 0%, go right ahead. So for our risk to reward, we always want to do this before entering a trade because we want to see if it's worth it. So we always want to aim for 1 to 3, 1 to 3 plus, minimum 1 to 2, but again, focus on 1 to 3 plus. So our first take profit would be at the negative 27% in this example. So from our entry to our take profit was 78 pips. We risked 23 pips in this case. So for this, I played this trade out, and after it hit the 27%, it actually hit the negative 68% after. Oh yeah, I put it in this example too. Okay, so our second take profit would be 68. So if we held this whole trade, it would be 114 pips. So rounded 115 pips in 1 day and 6 hours. Okay, so I explained this. So we move it from our high to our low. That was 61.8. And this would be our entry to our negative 27%. Our take profit would be at the negative 27, and in this case we had price go from the negative 27 back up, so we were risking 32 pips to make 120, which is a 1 to 3 ratio. So looking on the daily, our 100% goes to the low to the high, so we rejected off the 50%, stop loss above the 61.8 just in case it hits the 61.8 because that's a good retracement level as well. So we rejected. We actually got a bullish engulfing pattern, so that's an extra confirmation, and we could have took a sell on this next candle. So I will explain that. Okay, so from our entry from the 50%, our stop loss below, we're risking 40 pips. Our first take profit at the 0%. So risking 40 pips to make 143 pips. So this is a 1 to 3 ratio. If we got in after this bullish engulfing on this candle, we would have made 54 pips. That's only a 1 to 2 ratio, but again, if you wanted that, sure. So if we took these both entries, we would have 143 pips plus 54 because we had 2 entries, which would be about 197 pips. So USD CAD on the daily, marking up our lower high, lower low, lower highs. Higher highs, higher low, higher high, higher low. So 100% on the low, 0% on the high. So we came down and actually pushed past the 61.8. So again, that's why we want to have our stop loss near the 78.6 or the 88.6. But in this case, we're on the daily, so we want to have it close because around the 88.6, that's too far. Depending on how much you want to risk. Okay, so moving it from this new low to this high. So we rejected off the 61.8, then the 50%, and continued up to our negative 27% fib. So again, guys, if you keep doing this over and over and over again, like fibs is the best tool for entries and you'll get it. Just a matter of practicing over and over again.